Oh, victory. Anyways, good morning, everybody. Welcome to QuantBox Live, where we get our macro on and uncover the best fundamental opportunities across the global markets at just slightly after 6:30 a.m. on Wall Street, 3 hours before the open of stock market trading. My name is Wayne McDonald. I'm the founder of QuantBox. I'm also a Harvard educated economist. I take this information and use it for my trading. I've been trading for about 20 years. So I always start with a macroeconomic overview. That's the basis of my trend. And from there, I use technical analysis. QuantBox automates my macroeconomic research and then compares and contrasts assets so that I can create a fundamental bias for my trading. It's a whopping $8 to give it a trial for a week. Included are all the features, obviously, but also a training course on statistical analysis so you understand what QuantBox is telling you, but also a 16-hour training course on macroeconomics, all for $8. That's probably 20 hours worth of training. Anyways, look at all the pretty colors. They all have meaning. This is how we rank assets. Isn't that nice? This is what our COT reports. So we know this. So we know the institutional positioning, where they're long, where they're short, and where it's changing. We even take that information and then we can figure out through reverse engineering the positioning of retail traders, so on and so forth. It's pretty. Oh my goodness. Seasonality, fundamental data, technical analysis. Okay. Retail positioning, institutional positioning, lovely, all explained in English. Wonderful. So if you're watching this on YouTube, it's delayed many hours. Why don't you just try it for $8? You know you want it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Let's log into the dashboard. Yesterday was Monday, the 31st. Wow, is today Tuesday, the 1st of August? Yeah. Awesome. Very cool. Very cool. Oh, I got to remove that. The third quarter outlook, I think has been revoked. So I got to remove that from potential upgrades. Very cool. Very interesting. Just so you know, if you click here, this is where all the recordings are. Very nice. Let's log into the database and see what's what. Okay, going into the August. Nice turning point at being the beginning of the month. Loading. Loading the Google Cloud. Dang, they still haven't fixed that. I have to yell at them again. Okay, anyways, cool. Let's see what's up. Bitcoin is down below 29,000. Whoa, that's risk off. Okay. Okay, euro dollar, kind of flattish. S&P 500, kind of flattish. Gold. Okay, look at that, down below 2,000. Matters. Those psych levels matter. Oil hasn't gone up or down, still way up there at 81 and some change. Yield on the 10-year T note still not above 4, but it's holding steady. Okay, ever so slight risk on bias right now, but a score of 1. This could easily be -1 and you wouldn't notice the difference. Okay, so based on what's happened overnight, not a lot of opportunity yet. We can quickly take a look at the bigger picture. Risk off in the medium term, and that's that. So Swissy yen and dollar strength still possible with a score of -4. Everything else is mixed. So that would be like your weekly swing trade. Take a look at the scatter plot. Let me expando. Okay, let me close this. Look how terrible Bitcoin is now. Bitcoin has definitely moved another leg down. And it's leading the way. It's a risk on type asset, but it's getting crushed. It was over 30,000. Then it couldn't get back above, and now it's through 29,000. It's definitely working its way down. Holy smokes. So maybe it's a turning point. We don't know. Everything over here, Aussie yen, Aussie dollar, Aussie Swiss franc, and Aussie CAD and Aussie Kiwi are all down. As expected, by the way. Any particular reason why the Aussie is bearish across the board? Look at this, pound Aussie up. So Aussie definitely weak, even against the pound. Any particular reason, folks? How about the RBA not raising interest rates last night? And I was told that people expected their interest rates to go up. I'm like, who the hell said that? We had a discussion in that day trading group last night. I'm like, who the hell said that? Oh, they said it. I won't name the website, but it was one of these things where the calendar said that, oh, well, a rate hike was priced in. I'm like, priced in? There's no rate hike coming. And I used QuantBox to factually show that. So I went here, central banks. Shows you the power of QuantBox, like just straight up. The media said there was a rate hike coming, and I went here to QuantBox, and 4.1, 4.1, 4.1, 4.1, 4.1, and a cut a year from now. So I'm like, there's no rate hike. There's no rate hike. Just like straight up factual. I have the data. There's no rate hike coming. And last night, they didn't raise interest rates. QuantBox was right. Well, in this case, what is actually displayed, this isn't QuantBox thinking. QuantBox wasn't right. This is data pulled from the Reserve Bank of Australia database. This is what the RBA actually told us. It's not an opinion. There's no alpha here except that you have the data. So, anyways, all the amateurs were expecting interest rates to go up and blah, 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 and they should do this and they should do that. No, 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 no. Well, QuantBox just has the facts. There's no opinions. That's why it's quantitative. So, anyways, no. Pause, 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 pause. So, anyways, there you go. Thank you, QuantBox. Let's go back to the scatter plot. So, anyways, if interest rates were expected to go up, then people had already bought in the Aussie dollar, front running the expected hike. No hike came. They all got knocked out of their trades. Aussie's weak. Cool. So, the thing we talked about last night in the day trading group at Investor Bootcamp was, well, if they don't raise, that would be bearish for the Aussie. Yeah. Yep. 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 Okay. Cool. Yeah. What else is working here? Dollar strength. Dollar strength. What about here? Dollar strength. Slight dollar strength. There's some dollar strength going on here. Kiwi dollar, dollar strength. Gold, dollar down, dollar strength. Yen strength, yen strength, yen strength, yen strength. So when you go back into the risk gauge, it's looking at that overnight. Okay. And suggesting, but okay. So, anyways, Swissy strength, yen strength, dollar strength, bullish, bullish, bullish. Very interesting. Cool. So everything is working right as rain. Still a lot of bullishness in right in some of these scores. Remember, this neutral is wrong, so I'm gonna have to yell at people. I yelled at them, but I'm too nice, you know. You ever have a job interview where they're like, "Hey, tell us some things you're working on personally. What are some of dare I say, some of your weaknesses, Wayne?" Well, first off, I'm way too nice. I'm a hard, I'm an overachiever by nature, and I always put other people first. And I probably am too dedicated to my work to a point of a fault. I'd rather die at my desk than not achieve the corporate goals. Ciao. Just kind of out of interest, take a look, see where everyone's positioned. Aussie Swiss franc, CAD Swiss franc, dollar Swiss franc, pound Swiss franc, Kiwi Swiss franc, and then Euro Swiss franc. Uh, Retail's long anything with a Swiss franc on it. What do you think of that? Well, the current bias shows you should be buying Swiss franc, not selling it. So we can go to the charts and see what's what. Pick on Swissy. So retail's long all of this stuff. Trying to line this up a little bit. What do you think? I'll get rid of this. Do you want to be long? Seems like technically this is bearish, huh? Remember, it's not what you know mentally, it's what you can prove technically. Right? It's not what you know, it's what you can prove. How do you feel like something like that happening over the next period? Yeah, it does look like a lot of support right there. So what we need to do, you can't, like, for example, you can't sell it here, right? But it's like an observation. You'd sell it at almost the same price, but after sort of a breach, right? Yeah, Swiss franc is actually quite strong right now. I often get the question, well, why is Swiss franc so strong right now? And it's the only central bank beside, well, I guess Europe is the same. Europe and Switzerland will not cut interest rates next year. And cutting typically weakens a currency. And those ones, there's no plan at all. None. In fact, they're saying we will not. And other central banks say we probably will cut. So that's what makes it strong relative to everybody else. Pound Swissy is a great one. It's a more common Swissy trade for me. I call it lovingly, I call it pissy. It's the pound Swissy. Little ham and cheese. Doesn't make sense, but I call the British pound a pig. So, I don't know. It's a stretch. But this would be a strategic plan for me. Okay. Right now, we kicked off the bottom of support, this area here. Okay. Okay. And we'll see if this area, this trend here continues. So the projection looks like that, right? I'm trying to project forward. Cool. So it's like this little window in here, right? Matters, doesn't it? Okay. So I'll pay attention to that. We are through those moving averages, and we are stuck in this beautiful little range. But, you know, you could play this like moving averages. You could, but I'll caution you. I want to take this opportunity to make a technical point. Does this trend look up? Well, the red and green areas are drawn automatically, and they're showing me slope of a trend. Is that trending up or down? And you're like, well, it's a positive integer if you do the calculations. Oh, yes, but barely. Remember, we're humans. We can be subjective. Yeah, it's slightly, ever so slightly up, ever so slightly up, but it's generally flat. So you wouldn't use these moving averages like you normally would because they're for trend markets, trending markets. And if you sold the 2155 here on the daily chart on the Swiss franc trade, if you did this because of the moving averages, not because of the pivot points, but even it's kind of the same thing with the pivot points. You're assuming a trend that doesn't exist right now. You see it, and you might be right, but it doesn't exist in reality now. So that's the part you should be careful of. But your alpha could be that for whatever reason, you do believe now it's going to be the breakout. Okay, that's fine. I mean, take the shot, but just be aware um, it doesn't exist yet. Okay. Because even the slope, I think, is incorporating some of this downward move. You could analyze it and say the trend actually looks more like this, right? And that is solid sideways. Okay. Neat. Neat. Neato. See, if you thought that this was going to go up, a big part of the up equation would be, um, I think, the Swiss National Bank cutting interest rates and weakening the value of the Swiss franc. But that's not in the books. That's not in the playbooks right now. So if you thought that, you'd probably need to pay attention to the Swiss National Bank. But even then, we're talking, even if they decide to change their policy, are they going to do it soon or would it be over the next 3 to 6 months? Okay. And so, really, when we look at this, if the Swiss National Bank's not going to change policy anytime soon, you're going to need the pound to get ripper strong, and everything there is fixed or something, right? The worst is over, but I don't know if we're there either. So this is a great maybe sideways play, and that might actually be a strategy. Is there a carry? Mm, 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 mm. Wait, we're on pound, weren't we? Pissy. Okay. Thank you, QuantBox. Neutral. Everything's neutral. Heavily sold off, but unnaturally over the last 5 and 20 years. That typically doesn't happen. So you can see how unseasonal the drop was earlier. Ooh, this is messed up, huh? That's it. I think I can fix that. All right. Anyways, yeah, you have a positive carry. It's a nice little carry trade. If you're long this pair, you're going to earn 3%, three and a quarter. Hey, it's not a bad carry trade. Kind of. Yeah, I'm going to have to go through this with the team. There are a few things on here. I'm like, someone's going to get yelled at. Run, Forrest, run. Oil just hanging in there, still doing its thing. This is sort of the swing overlook. Aussie dollar got crushed yesterday, right? Risk off scenario brought Bitcoin down. Like we already know this, but I'm just trying to show you the same thing from different points of view, maybe different ways of using QuantBox. But the biggest loser this week, Aussie dollar, then Aussie Kiwi, then Aussie Swiss franc, then Aussie CAD, then Aussie yen. Isn't it nice to have known that the RBA was unlikely to raise interest rates? People were shocked by that. Yeah. Cool. Well, we got good data. All right. So I think the best thing to watch right now is, kind of the same advice yesterday. Watch the S&P 500. And we're still at key resistance levels. And if they hold, if things change to the downside, it gets interesting. It gets really interesting. It's really overbought. Do you guys know how overbought is it? It is, right? No, how overbought is it? It's so overbought. There's only two other times it's been this overbought in the history of the S&P 500. Which two times? Does it really matter? Okay. There are only two times in history where buying the S&P 500 was this expensive. Does that sound like buying low? So, yeah, this is a tricky one, huh? Andrew says, yeah, I could do a course on the Fred alone for sure. Yeah. So, anyways, yeah, you know, manufacturing PMI today. What else? Yeah, jolts are coming up. I don't know if that's today or not. ADP tomorrow. That's coming up. Bank of England on Thursday. CAD jobs, US jobs. Yeah, a lot of different things coming up. Very cool. So I will do some technical analysis on the S&P 500 again, and then I'll leave you to it. It's kind of like a waiting game, really. It's too high to buy, too early to sell. Does that make any sense? Um, Let me zoom in. The conservative projected high for July was 4,596.15. We knew that on the this was set in stone on this day here. Okay. So this was the buy zone. Now remember, this front run is what occurred. So somebody bought here. This was our buy zone. And based on the buy zone, this was the conservative target for the month of July if you're a bull. Now I had some concerns about it going that high, but I don't know. It is what it is. You don't have to agree with it. You don't have to like it. That's just what it is. um, And so, in this scenario, if you wanted to continue the same process, what we would be looking for in August is a bit of a dip here, somewhere, a bit of a dip. Now, this may have been it, but I would have expected more. That's the thing. It's not what happened, it's what you planned for. Okay. And I planned for a bigger pullback. I think that would have been healthier. And this is what the August trade plan would be if this continues up. What I really want was more like this. I'd like a pullback. I don't know. Like, I guess this is the stock market. I could change the 200 to a 100. Okay. And I guess I should change the color just to make sure I don't confuse it in my analysis. How about Dodger Blue? Okay. So the stock market typically uses the 100 moving average, and let's make it simple, for stock traders. Okay, which is not far off the 200 EMA, right? Maybe that's why it works. Um, so what I would like to see is a 7.5% pullback in the S&P 500 in the month of August, and then we recover September, October, November. Yeah. Well, praying never hurts. So we don't see the signs there yet. But if a reversal was going to occur, okay, this zone where we are now is the right price. Okay. It's not a prediction, but if we are going to have a bit of a pullback, let's say to the 100 moving day, simple moving average on the S&P 500 on the daily, and then we recover from there. That process is valid. In fact, it would be healthy. Doesn't mean it'll happen. So it could be corporations reporting, because we have 50 companies reporting today. Um, the first signs of mediocrity. Many companies are making profits right now, less profits than they used to. And they're not making profits because they're selling more stuff. They're making profits because the stuff they're selling is still priced high. So it's like, it's inflationary money. Is that good money? Are those good earnings? I don't know. Uh, some companies are scrambling. So I think BP increased their dividend by 10% and they decided to buy billions of dollars of their own stock. Okay. So they're pulling the supply of their shares out and pushing the price up at the same time. and then bribing you to buy the stock. I don't know if that's even a healthy thing. But nonetheless, that keeps the stock market up, you see? So, anyways, I think the higher this goes, kind of here's a summary. If the stock market has almost never been this expensive and it keeps going up despite that, and earnings are positive but not great, and some of it might be financial engineering, then the higher this goes, the more it becomes a house of cards, isn't it? So the worst thing to do is sit around and predict that the end of the world is coming, and um, we want to recognize there is no doubt about this. This is bullish, okay? But I think everyone would need a pullback. So it's more like recognize if a pullback does happen, recognize the importance of it, but don't trade it until it happens. And that's the importance of technical analysis. Okay. Where there is no doubt this is an uptrend. It's no doubt. Only a fool would sell that early based on a bet or a guess, and a fool and their money are easily departed. So that is incredibly bullish. But I can also tell you, as a technician of this asset class, uh, that is a very high price. And this is an extraordinarily high price for this asset for the month of July. Now, I know today is August 1st, but this is, wouldn't we want this to pull back at least to the 21? Okay, that could be down for a week. We're at 46 and have it come at least back to 45. I mean, really? Like, yeah, that wouldn't be terrible, right? Anyways, what do we know? These markets are mixed. Be careful. That's what we know. So don't just go into your charts looking for a trade. You'll find something. Recognize that August is probably the worst month or one of the worst months for trading and investing. And most institutional investors are on holiday. So if you're not on holiday and you got nothing to do and you're like, oh, well, I guess I'll just fire off a whole bunch of forex trades or trade the SP 500 while I'm bored, it's a terrible idea. So institutional investors, um, volume and volatility are low. That's more risk for you, and risk is bad. So be careful. Make sure you have an investment thesis behind what you do today and tomorrow. Big news, like I said, Wednesday, ADP, the bigger news, Thursday, Bank of England, and Friday, non-farm payrolls. So the best is yet to come. I think the volatility you're going to see today will have to do with earnings. Okay, earnings. Yeah, I know there's a jolts out there somewhere and an ISM manufacturing somewhere, but it's not shocking to find out that manufacturing in the United States is slowing down. I pointed that out 6 months ago. So that trend is likely to continue. So, anywho, one of those days, I'm here in case you need me, but today I don't think you need me. But it's good to know that you're not alone. Cool. And I'm really happy. I mean, I'll be honest with you. I smiled this morning when I checked my phone. Hey, what did the RBA do? High five, snap, right? Like that was great. So, so the Aussie's down, and that's what we talked about last night. Other than that, I'm really got my eyeball on that S&P 500. Cool. Hey, peace on earth. May the pips be with you. May your profits be above average. Thank you for being a QuantBox subscriber. And hey, YouTuber, kick down, come clean. Don't be a holdout machine. Visit quantbox.co. Take the trial.